The Brian Crabtree Show. Brian Crabtree.
I'm Brian Crabtree, talking about real estate in the Charleston Tri-County area. Today on the program, agents are saying the market's slowing down, listings are getting tough, prices are under pressure. But yet, in the backdrop of it, we're 5 million homes short throughout the country. So how is this possible? Is it the Iran war? Is something sinister going on in the market? Plus, we'll get into why there's a shortage of 5 million homes. All of that coming up today on the podcast. First, let's dive into the numbers. The latest Charleston real estate market numbers. The last 30 days, 1,453 homes closed in the Charleston Tri-County market. But real estate listings are up to about 5,100. That's a number that we haven't seen since, I don't know, sometime just outside of the market crash. It's about 1,800 homes fewer than we saw in 2011. The difference is we closed 1,453 homes in the last 30 days. In 2011, we had months where there were only 300 or 400 homes closed. So we need inventory to match that era of time and the structural deficiencies of the market. Then we need the inventory to be around 12,000 homes for us to feel that pain the same way we were feeling it back then. The reality is that the price growth is still there. It's pretty much stable, very anemic growth, 2 to 3%. That's in line with inflation. Most real estate markets that are healthy grow at about inflation plus 2 to 4%. Depending on job growth and such in the market. So it wouldn't be uncommon for us to experience 7% growth in Charleston if the inflation rate was 2 or 3%, because the growth in jobs and income here has been quite substantial over the last decade with Boeing and Volvo and technology and medical and other things. The median home price market-wide for the Tri-County is an amazing $450,000, give or take, depending on how you measure that. Charleston County, it clips up over $600,000 as the median home price to buy a home. We've covered the inventory. Volume is down. We were around 2,000 homes at points last year, although we're year over year about the same for March. We seem to be off to a slower start this year. Last year, March was a strong month, and April kind of got the wind taken out of our sails because of all the tariff concerns that caused a little bit of a stock market loss and frenzy. Obviously, we recovered from that. This year, we've had a little bit of an earlier surprise with the Iran war. So the question is how much is that impacting the overall Charleston real estate market in terms of prices? Well, in my view, the Iran war from a stock market and a real estate market standpoint is an opportunity. I'm not wishing the war or taking a comment on it, but when you have things that scare people and the market gets a little soft, it creates a buying opportunity. Right now is a great opportunity in the stock market and in the real estate market to find deals that 3 months ago you couldn't find because people are sitting on the sidelines. Here's the thing that gives me some peace about the difficulties we're finding in selling listings right now. Not that they're not selling, they're just not selling as quickly, especially for the spring, is that there's in my view, from my own websites, more search traffic right now than I've seen in the last year and a half. And it's been that way since December. So my view of the indicating factors for 27 years in this business, when my search traffic that's on a pretty even clip all of a sudden spikes really high at the end of the year and through the first of the year, and it sustains for about 3 months, as it has, that tells me that people are actively looking at making decisions about real estate somewhere between the 3rd and the 9th month of that year. Inject now the Iran war. So what we've done is we've taken the wind out of the sails again for a different reason. Again, whether we need to be at war or not, it's a different conversation for a different podcast. I'm talking about the technicals of it. So where we are now is we have a war. People are afraid. And this market is becoming more impacted by global and national economic events than it was 20 years ago. A lot of people think that we're insulated because it's Charleston, and we are insulated from a demand standpoint. There's a lot more people trying to move here than there are to New York per capita for the size of a market. So, if you take our housing stock versus the demand, our demand is much higher than they are in inbound into New York. And what we're also getting is a lot of the people that are leaving places like New York are coming here with bags of cash at Morgan Stanley, Goldman Sachs, JP Morgan, Private Client Wealth, those kind of folks. And they're using those stock funds of millions of dollars, whether it's generational wealth or it is inherited wealth or it is earned wealth. And when the stock market is under pressure, as it is right now, because of the Iran war and the inflation concerns greatly driven out of gas prices and oil prices, and if you're not following the stock market, just a little quick sidebar on that. What we're seeing is a flight to safety to some extent. The Exxons, the BPs, the Shell oil companies, those that benefit from this crisis are going way up. Exxon is up since we bombed Iran by $40 a share, roughly. That's almost a 33% gain year to date. Whereas you might see Microsoft is down from $500 a share to 375 and some change, give or take a little. So you're seeing a flight from technology, which was the real boom factor before the Iran war, and a flight to some of the more safe stocks, which are companies that would benefit from this crisis in terms of oil prices going through the roof. So all of that's going on. There's a shifting, there's a concern, there's unstable ground financially. And so people go, well, I don't really want to buy a house right now until all this settles down. I personally think that now's the time to get out there and get aggressive and make some offers if you're in the market over the next few months to buy a house, and not wait, because I think you might get a better deal now. But if you're using those kinds of funds and you're nervous about your equities or whatever that you're using to buy a house, because you ultimately want to pay cash for the house, even if you're borrowing against those, then that there is reason for concern there. So we're seeing that in our market. And trust me, 40 to 45% of our market's paying cash for houses. However they're getting their cash, borrowing against their stocks, liquidating stocks, pulling it out of their savings, IRA, 401k, whatever they're doing, they're paying cash. And so the cash generally comes from a liquid format, not just another house they've sold. Sometimes it's the house and it's sitting in the bank, and that's great. Those people are still buying right now for the most part. But the people pulling it out of equities or from an equitable liquidity source, those folks are a little bit skittish. And that's causing a little bit of a crunch in demand in our market, which is putting downward pressure on prices. The cool thing about Charleston is we continue to resist, for the most part, the downward pressure on prices, unless you look up in Somerville, like in Cane Bay, for instance, where you've got 300 plus homes and you have developers offering $50,000 worth of upgrades, granite, hardwood floors, shutters, extra showers, screen porches, 4% interest rates, 10,000 off closing costs, 15,000. Come one, come all today, one day only. We're knocking the socks off of the resale people down the street we sold houses to with no incentives 3 years ago. The good news is those prices have come down some more, but you are seeing pressure that is real there. Prices that might have been, I saw a house that I sold for $535, I think it was. And at one point, peak of the market, it would have been 600. And I had an appraiser call me 5 months later and go, how the heck did you sell it for that much money? I can't find any other comps at 510. I said, well, I'm that good, right? and the answer is that was partially true. I wasn't totally kidding, but part of it was the market is declining in some cases, in some very micro pockets. That was in Nexton. And that's pretty high end for Nexton and Cane Bay in terms of price point, because right now in Somerville, you can get one heck of a house. That was a beautiful home. That house in Mount Pleasant would have been $1.1 million. So you can get, it's half price up there. So if Somerville is an option to live, you can really get a great house at a great price. And it's kind of the market I like to buy my primary residence in. Obviously, I'm centered in Mount Pleasant and Charleston, but there was a time, I remember a couple of times in my career of 30 years nearly, where you could find that kind of inventory and that kind of negotiation in Mount Pleasant. Those days are long gone, but it's fun to buy in that market because you get to choose what you want. You don't have to settle. So location is the biggest factor for people, but if that's a location, now's not the time to sit on the sidelines. Now's the time to negotiate. Oh, you don't want to come, go to the next one, negotiate. So the market is it's just taking longer for homes to sell, and we're normalizing. We're going sideways, so to speak. Sideways is okay because we've kind of overshot, and I get concerned about the price point, that we're too expensive, and it can start to degrade our market in the sense that it's too expensive, it's too exclusive. We're seeing a lot of this happen in the office and and commercial segment where prices are getting so high that restaurants, small businesses, small offices, and community retail operations are having to shut down. There's been a number of them that are great little businesses that add value to the community that are local yokels that can't make it. And that's sad when you've got, corporate tenants with $50 square foot rents, which means 1,000 square foot office is $4,000 a month. It gets hard for the community and the entrepreneur to grow a business. And so there's a lot of that pressure in the market because of price, and it's okay even for investors, if we're a little stagnant for a while, it doesn't mean it's a bad market. It means it's a maturing market. And I think our runway here in Charleston, just due to demand alone, outside of a major catastrophe economically or politically, we're in a war, but a really breakout war event, something that can really cause massive declines across the spectrum like we had in 2008 or just shy of that. Barring that, which I don't think is out of the question, but I think it's not in the cards, at least for the next 3 years, now's a great time to enter the market because it's not as exclusive as it was a couple of years ago. One of the things that I think you have to always remember, yes, we could have a major economic event, a financial crash, a big time war event, nuclear, I'm just talking, outlier type of stuff that's not likely, but always possible, a COVID type of situation, although that kind of created an inflation and growth problem. We still are short 5 million homes. And that's the data that most of the experts that I follow are saying. And I at first was a little suspicious of that number, but when you look at what happened after the Great Recession in 2008, where we had built too many homes and we had caused a bloating of the inventory, over the last 15 years since that time, from 2010 till now, we have had a bit of a zoning concept creep. Well, we need some more zoning laws. The bureaucrats come in and the government. Mount Pleasant's a great example of it. Whole regime change, different philosophy. You went from Linda Page and Billy Swales and just old school Mount Pleasant folks that really love their community to whatever the combination is we have now. I'll leave it at that. And it takes 3 to 4 years to build a house. So developers can't monetize building $1 million, $500,000 homes like they used to. So the supply at the low end is just not there. And so the average home in Mount Pleasant is now over $1 million. And people that are speculatively building new construction takes them 3 to 4 years. They're sitting and holding a piece of land to do it. They have to build a McMansion $2, $3, $4 million to make it make sense. You can't just buy one, build something, do a quick turn and go. So what we end up getting is we get McMansions for $4 million and apartments, which the latter of which I think is disgusting. There's just too many apartments being built. And so we end up causing a problem in the community because we have a shortage of 5 million homes. We're not building in the medium to low end where we need it. In Charleston County, especially Somerville, Berkeley County's done a much better job of that. Infrastructure being the problem that they're facing. And so the zoning needs to change. I did an article at therealestateexperts.com, and I write a lot there. So if you want to read some of that on my blog tab about maybe making AI, this was an idea Jeff Bezos of Amazon came out with, maybe making AI the process for zoning where you have all these overlays of all this crap that they require to build a house. And you're able to submit your plans and submit your stuff and fit a format, and AI goes through and calculates all the bureaucracy that's there and immediately kicks back in 5 minutes an approval or most likely a decline with bullet points of everything you need to do so that you can save the 6 months that I just described for that. Denied, but, right, takes forever. And then you go round and round and round with zoning. This is a huge problem for affordability in America. Forget what your home is worth now. There's an idea that, well, I've got my house, I don't want any more out there. But then you have your kids and your grandkids that can't afford, especially in places in Charleston County, to grow up in that community, Mount Pleasant, West Ashley, James Island, etc., and then live in the community. They're being pushed completely out of the market. Jedburgh, Moncks Corner, Somerville. So their parents raised them and live in a house they bought 20 years ago in Mount Pleasant, but they're having to move 45 minutes to an hour away because they can't live anywhere near their community. So what ends up happening there is you have a kind of a fracturing of the culture and the community that we've built. So the zoning situation is really the big culprit that we as community leaders need to start thinking about when we elect our local officials, to prevent it taking so long to be able to build houses. With a 5 million home shortage in America, if your sole play in the housing business is I want to see my values go up, 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 and up, then we need to keep a shortage. But if you want to be able to see the community continue the legacy that made some of these areas so great and so attractive, like downtown Charleston and Mount Pleasant and West Ashley and James Island and even Somerville, which is, I can't really say their zoning is as difficult up there. We've got to have better and more efficient zoning to keep the houses from appreciating so fast that all we build is $2 and $3 million houses and make the markets that are so important to all of us exclusive to so many people. I mean, we need to build houses for everyone, not just the upper end, because you end up with affordable housing issues. You don't have enough workers. The workers live too far out. It gets more expensive, and it causes a massive cost increase for the people that have lived and made the community so great for so long. So anyway, if you have a housing need or you want to talk about housing here or anywhere in the world, if it's not for me to talk about, I'll find you somebody like me that has the expertise to help you make the right decisions wherever you're thinking about buying, selling, or investing. BrianCrabtreeRealEstate.com, Brian@housedog.com, or 843-343-4141. Thanks for watching.